we are looking at this local consolidative period. That has also recently been more or less, contracted, right? We were watching this contraction going on for some time. Even if you turn off the candlesticks and replace it instead with the line chart, right, to eliminate all the noise, intraday noise, and leave just the candle closes, because this is what the line chart suggests. We are looking at a range bound that's lasted practically ever since December, started December 3rd or 4th, because this is the time that the major drop occurred, right? And what's changed since then? Well, the truth is that there is not too much change, because we've been moving in a rectangle. We've been moving in a range box, in a range bound, right, between the bounds, between the extreme low and extreme high. And for the line chart, it was defined, well, with the range floor at around 46,000 and about 51.5 practically for the range highs, right? But if we take the actual candlesticks and to include the intraday price action, which is OHLC, open, high, low, and close, all the four pieces of details, for the pieces of information for the intraday price action, then we then conclude that the long-term trend defined by the high time frame trailer, which is on the weekly settings, okay, the high time frame trailer shows you the high time frame trend, the high time frame invalidation level for the prior trend, right? And the prior trend has been upwards, of course. In case it had flipped to the bearish tendency, to the bearish trend, well, we would be talking a bit different story right now. We are marking a local upwards bounce for the first time with a decently established, bullish period over the entire range ever since the pre-drop periods, if you will. And if you have a look, actually, this period of bouncing off the 46,000s, I'm talking about this orange period, this orange time kind of like, again, scope from 46 highs, 46 lows towards like $52,000 highs locally. This is the longest orange period, basically time-wise, ever since we had this 40,000 to 67,000 push. Okay, this is the longest we have been officially bullish per the BPro, per the mid-daily chart on Coinbase. Okay, so we have seen a couple of very very significant points to make. Okay, first of all, we are ranging, right? We are ranging and we are testing the range highs. That is something that many of you should be already aware of. The range highs of $52,000. Okay, this is being tested. We never basically tagged anything lower than $45,000 in here. The entire bound of the entire box in here, was filled with very strong demand. Anytime we actually dipped below $46,000, the dips were bought back. Okay, and whenever the dips occurred, well, there was quite an immediate an instant push in the upwards direction. Okay, so this officially served, based on the price action and based on the BPro, as the reload zone, or as the decent buying opportunity. Okay, they had also the additional confirmation from many different other factors, just like on-chain, just like sentiment of the extreme fear, etc. But here, basically, the high time frame invalidation level of 47,517 would have been triggered, if you will, only if we had printed a very severe downside close of a weekly session beneath that level. We didn't really record that, right? Instead, we saw that anytime Bitcoin flashed, the local decline below this level, below this threshold, below this high time frame trailer level, the mid-daily chart saw immediate pullback, okay, an upside pullback. So this could be considered, hence, as a long-term demand zone. Okay, after 40% retracements of the highs of $69,000 down to 42,000. This has been, ladies and gentlemen, pretty pretty decent retracement, pretty decent correction. So we are ranging, this is a range inside the larger range, the range which actually the breakout of this local range would also be a breakout out of this month and a half long range. Okay, so we are talking about this, well, this is what you call a fractal nature, right? A pattern happening inside a pattern, a trend happening inside a trend. And breakout above this local range would have severe bullish implications, not only for this local range, which would target, based on the polarity change principle, the base size equal to, well, 49.4 and 52, which is, you know, like 2500, 2K 2500. Place it somewhere in the mid 50,000s, $55,000, if that is the actual case. But this would have larger implications because we are talking about this range breakout as well, right? So the proper breakout out of this local range in here would also imply a proper breakout out of this larger range, okay? And this larger range brings a base size of 42 up to 52, which is $10,000. Okay, so $10,000 target would be added on top of the breakout level. So this would place us somewhere around $62,000. So short-term implications out of this short-term range would have $54,000-$55,000 as the potential target, and $60,000 to $63,000 potentially as the medium time frame implications, which would only add and strengthen the bullishness of this movement, right? We have already seen, everybody, this breakout, right? So this bullishness coming from the B Pro, which actually was flashed before the breakout occurred, so the B Pro once again served as an early trend reversal indication, shows an additional confluence, convergence, no matter how we call that, basically with this breakout, right? So trend line breakout, trend line break happened and has been so far confirmed pretty well. We are basically trading in the upper half, right? In the upper half, above the baseline, which is the main average. So we are in the upper bullish half. You can tell that there is also this local resistance block, this price block. It's sort of like an A view up, shows you a volume-weighted average price. It basically suggests that in case we break through this level with a consecutive candle close through this level, this is an attempt, this is an attack for an approach for the breakout over 52,120. And if that happens, we would tap in the upper volatility band resistance, okay? You can tell that the average volatility based on the standard deviations is set in a rectangle, is set in a range between the high extreme and between the low extreme, between the low of the low band and high of the high band. Okay, which for the levels is basically 47, 537 approximately, and 53,215. So you can tell that based on the volatility, $53,000 is also a resistance level. So well, it would be safest, because what may happen is even if you close the $52,000 candle, right, close it through this resistance, this would be an early indication of a very potential powerful breakthrough moment for Bitcoin for the entire corrective period. But it would be definitely safest not to close inside this local resistance based on the volatility, but to kind of like just disarm the bears like completely, right? As in close the candle that would defeat the bears, like knock them out of their feet immediately with no kind of like, just no bearish reasoning anymore. In case you see a candle closing in a one or a couple of sessions, best if it happens in a one, although it requires some more explosive movement, the one that would close through the high time frame trailer resistance and the volatility based resistance. Okay, so overcoming this resistance, this volatility and trend based obstacle, this would be the most powerful breakout that you could see, that would literally cross all the conditions, all the important check boxes, okay, on the technical analysis list for the potential bullishness. So here, this breakout, if in case you see a proper break through the high band of the momentum bands, baseline bands, no matter how we call that, this would validate potential new highs signal.